Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, October 22, 2014. And you had a pullback or a down day in the SPDR or SPY, S&P 500, Dow, NASDAQ, across the board. And that was probably a normal, welcome, unsurprising pullback, right? I mean, basically, your S&P was down 14 points, Dow was down $1.50 or 150 points, NASDAQ down 36. Nowhere near giving back everything from yesterday's gain. So this is a normal garden variety pullback. It got blamed on the terrible incident in Canada today. I believe it was Ottawa. And I don't know all the facts there. The jury's still out on exactly what happened. But nevertheless, terrible things when these lone rangers, try and inflict harm on whether it's government or any innocent people. It's horrible. So that took the blame, or that gave the blame to the downside. But that's not the reason for the downside, right? The reason for the downside is, and if we look, let's just do this. We did this last night, okay? If we just draw a Fibonacci retracement here, okay, and if I erase this, I didn't mean to do that, okay, I just want to move this over, and I want to show you that yesterday, okay, we came right into the 0.618 retracement, Fibonacci retracement, 194.24, let's call it. The high yesterday was 194.20. So, this is not unexpected. This is a normal stopping point in the market. In 5 days, we went from a low of 182, right? What was it? 182, beneath 182, 181.92. So we went from 182 to 194 in 5 trading days. Guess what? Market pullbacks are coming. I wouldn't be surprised to see another down day or so in this pullback. And remember, we talked about the ABC rally, right? Or the ABC correction. A, B was the start of today, maybe. And then maybe C is one more leg up. Maybe we just have another leg up tomorrow. There's really no way to tell. My anticipation for the next couple of days is either a farther pullback and then a bounce up. Maybe to this 50-period moving average, this pivot high, something like that. 197 is the outside target in my mind. So if we pull back for another day, maybe we thrust up to 197 and fail from there. We'll see. There's just really no way to tell. Right now, we're in the middle of a corrective rally off of the corrective rally. Okay, that's kind of the way I'm looking at it. Big down move, corrective rally. Now we're in a corrective rally of the corrective rally. I know that sounds crazy. It's meant to sound crazy. But nevertheless, that's where we are. So there's really not much else to talk about the S&P. It was just a garden variety down day. But what is important, I thought was important, is you start to see these stocks, these Dow stocks. Forget the S&P for a second. These Dow stocks, like GE's been stuck in the mud forever. Okay. You have Coca-Cola made a nice run over the last few months, but really took a hit the other day on earnings, just more than it should have. What was the other one or two that I saw? Now I can't remember. Oh, McDonald's was another one. Really horrible performance. And there's a few more like that. There's a number of Dow stocks. I'm going to go over these because I don't like what I'm seeing. What I'm seeing is deterioration in too many Dow stocks for the index to be where it is, right? The index, all in all, I mean, let's just bring up the Dow, okay? Here's the Dow, all right? We're at where do we close today? 16,586, okay? I've got 16,461. 16,461 on the close today, okay? And the high was 17,350. Okay, 17,350. So we're just like, I don't even know the percentage. Maybe we're 4, 5, 6% off of the all-time highs in the Dow, and you have stocks like talking and typing. McDonald's. Now check this out, okay? Let's look at a weekly chart of McDonald's. All right. Now this stock really topped back here, okay, in April, made another run at the top, okay, in May, all right, and it's been melting away ever since while the Dow was going up. Okay, let's not forget the Dow was going up. Did I see Caterpillar? Was that weak? Yeah. Topped here in July, okay, made an attempt, failed, okay, and here we are significantly off the highs when the Dow just made a new high. Okay, and there's other ones like this. GE's a debacle. GE, I got to go to the monthly to see the effect of GE. Now watch this. Look at that. Topped in 2007. Okay, hasn't sniffed the high since 2007. This is not good for the long-term market. Okay, I just don't like GE. Or it just should be higher, but it's not. And by the way, this is making a bearish consolidation. Just not good. It's just not good for GE. What other Dow stocks was I looking at that was in trouble? Here's a picture of Boeing. On a monthly basis, not so bad. I don't think the weekly looks as good. No, it's not great. It's not good. It's below the moving averages, at least the 20 and the 50. It's not great. This is setting up to go lower. It's probably going to go down to 110, 111, maybe 114 if you're lucky, 113 and a half. That's where Boeing's setting up to go. Anyway, so let's go over to a couple other things tonight. Let's talk about gold. So gold finished the day on the gold futures contract 1240. Where we're trading right now 1242.90, and I think gold's setting up for a little bit of a move higher. Let's go over to the daily chart, and we're hovering at this area too long not to go higher. That's just my take on it. That's not scientific. That's not analysis. That's just a gut feeling. And I think that gold has a move up, maybe to about 121 in the GLD, maybe 1270 on the futures contract, and that's probably it for now. If higher prices come, but that's all I can see in the near term. Oil took just another hit today. In the middle of the day, the price of crude after some inventory reports really dropped like $2. USO was down, hit hard. Lower prices are probably coming if we can't hold this level here at $30.20 on a closing basis. Daily closing basis, USO doesn't hold 30.20. We go lower. Anybody that wants to take a flyer in oil right now, you can take a trade here and just set your stop for a close below 30.20. So you're only risking, where do we finish today? On the low, or the close today was 30.52. So you can risk 32 cents, depending on where we open tomorrow. But as it stands right now, you can risk 32 cents for a close below 30.20 to see if there's any upside. That's a pretty good risk reward. If I had extra time on my hands, I might take that trade. Anyway, okay, so interest rates didn't do much today. All in all, it was a pause day in the markets after a huge up day, not an unexpected pullback. You got a lot of earnings coming out, and the market's going to whip around a little more. If there's another push up on the spider, okay, just keep that 197 in mind. That's probably your top end before we turn back down again. And again, like I said last night, we don't know how low we would go. The higher we go on this corrective move, the less likely it is that we'll break these lows this year. Okay, so that's just kind of a good guideline. So what that means is that if we pull back, okay, pullbacks are going to be bought depending on how this rally finishes off. We'll see it in a few days. We'll take it one day at a time, and I'll certainly let you know what I see here. But that's all. That's about it for tonight, folks. Just a snapshot of the markets, a pause day, little pullback, nothing wrong, probably some more upside to this rally. And then we'll see. Oh, by the way, there's an eclipse tomorrow night. That's important. The markets usually do something around the eclipse. I've talked about this many times, but there's really no way to tell which way it's going to go. The downside seems to be more prevalent, but it's not enough to say it always goes down. But certainly what you can look for is either a turning point or an acceleration from an existing move. I know that doesn't help, but I'm just making you aware that tomorrow after the close is an eclipse. So if the market is positive tomorrow, for example, you can look for something like this. Let's say the market's positive, there's no negative news, there's no negative sentiment out in the market, and we're higher tomorrow. Since the eclipse is about somewhere between 5:45 and 6 o'clock at night Eastern time, I would look for higher prices to act as a magnet into the close, or the eclipse to act as a magnet for higher prices into the close if we're up tomorrow, and then possibly turning the following day on the eclipse in motion. So that's one scenario. The other scenario is we're down tomorrow and the market turns up on the eclipse or accelerates down. So I really don't have any solid, this is what the eclipse is going to do. I'm just telling you to watch out for the eclipse. It could act as a turning point, could act as an acceleration point. No way to tell. Just something to be aware of. It's more market information. The more information that you're armed with, the better off you are, the more successful you can become as a trader or investor. We're going to leave it there tonight. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis.